So what are all these fees? So, I've heard that so many times, and I know that's just kind of a natural reaction when clients look at a loan document and they go, wow, I got to come in with my down payment, but I've also got to come in with $6,000, $8,000, $10,000 in closing costs. What are all these fees? So let's kind of start at the top, and let's give you just a little bit of a detailed breakdown of what closing costs are and who gets paid and where there's fluff in those things or where there's not fluff in those things. And I'll just tell you what my standard fees are because, I have a real good feel for what our fees are here. And these may vary a little bit from bank to bank, institution to institution. But generally, you're going to be really close. I mean, if you're like 0.5% off in the total cost of your loan, I'd be surprised. Okay, so let's start from the top. The number one fee that people see, because it's at the top of everybody's quote, number one, and it's generally one of the larger fees, is the loan origination fee. So the loan origination fee is essentially our profit. It's what put the clothes on, what keeps the lights on, what paid for the car to get me here, what paid for the house that I came from, and the food that went in my mouth and my baby's mouth this morning. That is our profit in doing the loan. Now, keep in mind that also covers things like the office equipment that you see here, all the marketing that I do. The normal expenses of running a business are certainly going to come out of that origination fee. So that's usually 1% of your loan amount. Then you've got a processing fee. Now, our processing fee not only pays a processor who gets all the documentation that I give and gives it a second set of eyes and then orders a whole strew of verification. So I'll gather paycheck stubs and W-2s and tax returns and credit reports and all this documentation from you as a borrower, and then I'll give that information to the processor, and then the processor starts all of her reviews. She's going to validate your credit report and your social security number to make sure you are you and this isn't fraud. She's going to validate your paycheck stubs with your employer. She's going to, or what's called a verification of employment. Sometimes those cost money, up to like $25 sometimes. We're going to verify your rental history or your mortgage history. We're going to verify that the tax returns that you gave me are the same tax returns you filed with the IRS. And you might think, well, that's stupid, but you would be shocked. People either out of fraud, which is the minority of situations, but they sometimes they'll change their tax returns. They'll go in and amend something and say, oh my gosh, I forgot that I had another $50,000 loss. Well, an underwriter's got to factor that into their loan. So, anyways, without getting too in depth, there's a tremendous amount of verifications that are done once I get all of your loan documents and select the loan type, and that is done by a loan processor. There's legitimately 10 to 20 hours worth of work depending on the file that goes into processing a loan. Usually processing fees, depending on conventional or FHA or Utah housing, can range anywhere from $495 to $595. Then you've got underwriting. Now this is the person who is hired generally by the institution, the bank who's going to be lending you the money, and that person's job is to review everything that I've collected, everything the processor has processed, and to make absolutely 100% certain that you are a safe fit for this bank, that you're going to have a high probability of paying this thing back, and that everything matches. The purchase agreement matches the address on your title report, matches the address on the note that we have you sign that you're promised to pay, and that everything is in sync and there's no problems there. And one of the number one reasons for an underwriter is there's been a lot of lawsuits back and forth between lenders and banks, and this underwriter is just they're the eye in the sky watching over these files and making sure that there's nothing that's gone on that's inappropriate. And then the file from there, I forgot the appraisal fee, excuse me. We've got an appraiser who goes out, and the underwriter, of course, is reviewing that appraisal to make sure it's legitimate, and there's a fee there for that. So then the file moves from my office, which is the underwriting, and we do all of our own origination with me, processing with my processor, underwriting is all done here. The file moves over to the closing department, and they normally have a fee for drawing your closing documents, and then they send those closing documents out to the title company. Now the title company usually has a closing fee, and they usually have some itemized fees like a courier fee, a wire fee, a few other little things like that. But all in all, their closing fees are about $300 to $350. And then there's title insurance. And title insurance is extremely important for you to understand. And there's 2 title policies or title insurance policies that are issued on every purchase transaction. The one you're going to pay for is called a lender's policy, which means you're paying for a title insurance to insure the bank who loans you money that you're buying a property that has no other liens against it. It has what's called clear title. And so the bank wants to know if they're going to loan you a couple $100,000 that they have the first right to come in and foreclose against that home, and it's the title insurance policy that you pay for that ensures them that they have that right. And then there's also what's called an owner's policy. So you want to know the same thing, right? If you're going to take out this big loan and put down your down payment, you want to know that you are buying a property that has clear title. But the seller, here in Utah at least, the seller pays for your title insurance, your owner's title insurance policy. So you don't have to worry about that. You're always going to be insured to have clear title to your property. Okay? And then everything has to get recorded down at the county recorders, another $85 or $100. And then we have to set up an escrow account. So typically your taxes and insurance are included as a part of your monthly payment. They set up usually 3 months worth of insurance and 3 months worth of taxes, at least on a purchase transaction. That's how it normally breaks out. And we set that in that escrow account. And the escrow account, every month when you make your monthly payment, they'll take a little off for your insurance, a little off the top for your taxes. They'll stick it in this escrow account. Come time for your taxes and insurance to be paid, boom, they send that check right out to the county tax commissioner, and they send it right out to your insurance agent on your behalf. You don't have to worry about it. So you may get a bill in the mail from your insurance guy, but you look carefully and it says duplicate copy, because they're going to send the original bill right to your insurance or to your mortgage company, and they'll take care of that. So to set up that escrow account, that's called a prepaid expense. And then last but not least, you've got your prepaid interest. And so whatever day we decide to close in the month, whether it be the 1st or the 30th, any time in between that date, the day we close, you're going to prepay interest for the rest of that month. So if we close on the 15th and it's a 30-day month, you're going to have, well, you'd actually have 16 days worth of interest, because it'd be the 15th through the 30th that you'd be prepaying for interest. And so that's also included in those closing costs. So as a general rule of thumb, if your loan amount is over $100,000, your closing costs are going to be about 3%. If your loan amount goes over about $400,000, then your closing costs may drop down between 2.5% and 2%, just depending on how big that loan gets. If you're under $100,000, you can probably expect to pay more, about 4% of your loan amount. So, most loans that we do are going to be from $180,000 to $400,000, and a great rule of thumb there is that your closing costs are about 3%. So I hope that makes sense. If you have any other questions on any of the fees that are charged on this loan or on any loan, don't hesitate to call me. Happy to help you. Wish you the best out there with your house hunting, and take care. Talk to you soon. Bye-bye.